All right, I'm going to take a look at three markets today: gold, um, also energy and stocks. Um, it looks to me like gold is probably in a whipsaw event. We Yesterday gold closed just marginally below this um, resist or support zone right here at 1275. That could have opened the door for a final bloodbath phase that would come down and break this intermediate trend line. But today it's bouncing again, and that makes me think. And yesterday, the junior miners, and I believe the XAU and HUI all made lower lows below their low here of early May. So that suggests to me that where gold is probably in a whipsaw event where it's we get a down day like yesterday, people get short, and then today it rallies. The shorts get stopped out, have to cover. This gets the longs bullish, they buy, and then goes back down, and the longs get stopped out, and you just repeat this. I've seen them do this as many as three times before a final cycle low. So this little spike right here occurred on day 13. I don't know that I have ever seen a daily cycle bottom on day 13. Seems too early to me. The obvious target for a bottom would probably be on or right around the next FOMC meeting, which is June 18th or 19th, I believe. So I'm going to suggest take every move with a grain of salt in the metals market right now. Um, we're probably in one of those scenarios where you have to fade uh, any convincing move. So yesterday's move down looked like it was convincing move and all clear to short the market for a move down into the bloodbath phase. And so today, of course, we bounce. Uh, the bounce is probably not going to follow through, and then we'll just continue this chop back and forth, and then my guess is somewhere around the first or second week of June we'll get that final plunge that breaks this intermediate trend line, and that'll be the final um, intermediate cycle low that'll finally complete this frustrating handle correction pattern. And then at that point, I think uh, the gold and the metals and miners will be ready to take off to the upside. But as of this morning, I tend not to trust this bounce. I think gold is entering a whipsaw event, and it's going to churn back and forth here for a couple of weeks and take money from both sides, bulls and bears alike. Uh, and then we'll get a final uh, intermediate cycle low that does finally break through this support zone here at 1275, break through it with a sustained move, and then at that point, I think we get our rally into the second half of the year, the rally that, in my opinion, I think is probably going to break 1400. Moving on to energy. Um, Yesterday, this drop in energy was a warning bell. It's still very early in this daily cycle, and for a daily cycle to be that weak, that early in the cycle, it was suggesting that the daily cycle was preparing to roll over and left translate, and that's exactly what happened today. Oil has moved below um, this daily cycle low here. So we do have a daily cycle that's left translating. Um, I I'm probably just not going to be interested in energy again until we at least retraces back to 55, maybe even a little lower. But as of right now, this is giving signals that we're in an intermediate decline, and we've got a daily cycle here that it has left translated and should probably have further to fall. So maybe if oil gets back down here to the $55 zone, I might be interested again. You can see the 200-week moving average is way down here at 52. That could even be a possible target, I suppose. Would be a retest of the 200-week moving average, but not really ready to jump on the energy bandwagon again right now. And even though we didn't catch the exact top, we got out a little too early. We got out right here around $60. We at least didn't get caught in this correction. So we're in cash, ready to buy back again when it looks like the intermediate cycle has bottomed. And it doesn't really look like it. I'm not going to try and pick a bottom today, so I'll put it that way. And then moving on to stocks, this was, and actually, I guess it could still be up in the air as to whether or not this was going to turn into a third daily cycle, and then we'd have to wait all the way out to July for the final intermediate cycle low. As of today, anyway, as of this morning, it looks like this is a second daily cycle that is just going to continue to stretch, and we're ready to produce the C wave down into a final intermediate cycle low. So we've got the first leg down, the A wave down, a bounce, the B wave bounce, and it looks like we're trying to start the C wave decline. We'll have to see, an effort may be made again today to try and stop this, turn it back up, but hopefully we can get a normal correction, a normal C wave decline that would bring the stock market back down, a 38% retracement. Let me put that in. All right, just a normal intermediate retracement would be back here to at least the 38% Fibonacci, which is close to 2,700. I would want to see at least something back down to here before I start to become interested in buying the stock market again. And 50% would be even better in my opinion, especially considering the extreme levels of complacency that were generated by propping this market up into the FOMC meeting. That kind of complacency should have ramifications, and I would think a pullback of 50% of this rally would be a more natural level to look for a bottom, and that would also correspond with the lower level of this consolidation box right here. So we'll just have to see what transpires over the next couple weeks. This could occur very quickly if this does. And right now this just looks like a second daily cycle that is stretching, and if that's the case, then this should unfold very quickly in the space of 5 to 10 days. So we'll see what happens over the between now and the first week of June, let's say, and if we can come back down and test this 50% retracement here, the lower level of this consolidation box, then at that point I would be interested in stocks again, and maybe looking for a long entry. But right now I'm not. I want to see a C wave decline, and we're trying today to start that, but we'll have to see whether or not the plunge protection team comes in at the end of the day and rescues us again, because it's still I mean, this looks promising, but it's still up in the air. They could still turn this back around and then force another complete third daily cycle before we get our intermediate cycle low. But I hope not. I hope they just get out of the way and let this correct naturally, and hopefully we could come back down to somewhere in this 50% retracement level. And at that point, then I think uh, that would be a good spot to start looking for uh, an intermediate bottom and the beginning of the next leg of this bull market.